Happy holidays, Brynne.
Same to you. Can't believe it's December.
Unbelievable. I mean, time like the sands in the hourglass. So are the days of our lives.
That's right.
You watched it,
Just
didn't you?
on time. Yeah, I know. It was a soap opera, right?
Oh, yeah. I forgot how much younger you are than me.
No, I know. No,
All
I
right.
just wasn't a soap opera fan.
Yeah. Well, you know what? If you're a trader, you don't have to watch it. You can live it. So,
yeah.
Pretty unusual to see. Everyone, this is Brynne Kelly. She's one of the best energy analysts I know, and I've interviewed quite a few. And we had that day, Brynne, with, everyone had their head turned on Friday and crude collapsed $3. What do you think was behind it? It didn't seem like there was much volume for it to be able to be that dramatic.
Yeah, obviously the market is always in search of what was the headline, what was the one thing that that led to this. But, to be fair, Friday was Brent expiration, it was gasoline expiration, it was heating oil expiration, it was a holiday week. We had an early close.
Yeah.
It's just an easy thing to happen, on days when there isn't that much volume.
Right.
So, of course, everyone was asking for the headline or what is it? And
yeah, I've been asking.
Yeah, look, we're in a range. We've been,
right.
In the same range for quite a while here. So we were on the high end of it. It was light volume as people were closing out, Jan Brent and December RBOB and heating oil. You just kind of see.
So technical factors of liquidating instead of taking delivery on some contracts. And are you in the camp that there's usually pressure on energy products during December because the producers want to blow it out so they're not taxed on it?
Well, so you're talking about year-end inventory. So LIFO and FIFO, it depends on what method some of these big organizations use. Usually, the valuation is sometime mid-month. So it depends on where prices are, right?
Okay.
Depending on what they'll do, because if you're on a LIFO basis, the last transactions you have are what value your inventory. So, you kind of have to know where you are, relative to where it's been the rest of the year. I don't know if it'll be that big of a deal this year. Prices have been in such a narrow range this year that, I don't know, I don't know how impactful that will be. You never know. Last year we just had everything falling apart, right?
Right.
And so why not throw out the baby with the bathwater?
Well, that's a good point. I mean, both, equities had their worst December last year since 29. And that's when crude was, selling off from 75 to 40. So since then, we've had multiple new highs in the S&Ps. And actually, the WTI stopped at 61.8 back from the recent high. So is the oil market telling us something that it really hasn't had the same degree of recovery that equities did?
Well, sure. There's a lot of sentiment involved here and in the oil market. Certainly, you could say that carbon is not in favor at the moment, and you can imagine that probably leads to lower fund flows in that direction. So just simple high level things like that kind of drive how people want to position going forward. We've also been through such a period here of U.S. production growth that nobody's that worried about the upside. It feels as if
Yeah,
we
good
have
point.
this sort of cheap call on production. So even if we're laying down rigs, if prices were to move significantly higher, it takes less time to get drilling rig on land up and running than it takes deep water drilling production to get online. And so we just have the market believes in lower lead time, faster response to prices. And there's also a quandary because there's a little bit more competition now than there has been before in alternatives. And I'm certainly not a electric vehicle proponent or anything like that, but now more than ever there are demand response efforts and alternatives. And so if you get oil prices too high, you sort of you open the door a little bigger for some of those, right? If they stay low, you can stay competitive.
Do you have a view on the Saudi Aramco IPO, whether it's ever going to come off, and is that a factor playing into prices here, in your view?
Well, I think I'm in the minority here. I don't really think it has any impact overall on prices. What I would say is, when you see a company that's IPOing, it's a late stage, we'll call it a late stage IPO, right?
Yeah, I mean, it's been around for a while, right?
Yeah, late stage. And we've seen how those have gone. And at some level, and everything that they've published about it, what I note is that they're looking to raise money to diversify out of oil.
They're looking for bag holders.
Well, they're just trying to raise capital so that they can upgrade their infrastructure. They can move away from being dependent on oil revenue. Right. And usually, if you see a company, come to market, you want to see that the proceeds they're raising are going to further the business that they're in, right?
Interesting.
And in this way, they're indicating that, that they want to use the proceeds to get out of the business.
Yeah, very interesting. I'd love to see that brochure.
And I mean, it's what, 5% or something, 10%. Yeah. I mean, I don't know. I mean, do you think does any IPO really affect the underlying price of something? I mean, I don't know. Maybe let's look back at like Uber and Lyft, right? When one or the other went public, did we say, oh my gosh, it's going to be free, or they're going to manipulate the prices of their fares? Sure, they might offer promotions. I mean, I don't know. It's probably a bad example, but I don't know if an IPO itself does anything. It's
just a way to for someone to cash in and get liquid.
Exactly.
Liquefy.
Right.
And, and other people come in and take the risk that maybe it's going to work or not after the big guys cash out.
Yeah, I mean, they certainly have a proven revenue stream, right? And I mean, as an investor, you might like that in your portfolio, but it's not like it brings new oil to market. And as we've seen, I mean, to date, it's not exactly like they've, anybody has been able to significantly, let's say, control prices, right?
Yes. Yeah, we've seen that. We've seen that attempt. Do you think that we're range bound infinitely, or what do you think would be the catalyst for us either to break down under the range, which is about $50, and break out above the recent range of say 58 to 60? Do you see any catalysts? I see you have some slides prepared, so I'm going to let you tell us.
Yeah. I always have some slides, right? They're not all the technical stuff that you guys, do so well, but, I like to
fundies.
I like to look for, exactly as you mentioned, what is breaking out? What could move us? What is holding us back? What is the driver? Right. And, the driver really is, global demand and for the US, it's export economics, because the marginal barrel produced needs to be shipped out of here. So in that way, what really is the driver now are, let's say, Brent prices as a proxy, right? But really, Chinese and Middle Eastern prices, and the spread between WTI and those markets versus the cost to get it there. And
Okay.
one thing that's happened in this fourth quarter is, we had those sanctions on those Costco ships, and, a lot of problems insuring ships going through the Straits of Hormuz. And it just got really expensive to get, a barrel of oil from the US over to China.
Okay.
And that is where, demand growth is, right? In India, China, and we're not that strategically located to those markets. And depending on the cost of shipping, we really need to be discounted enough to make
it feasible. Yeah.
Yeah, to make it feasible.
I mean, why would China buy oil from us when it doesn't have to abide by the sanctions and can buy from Iran, which is in the neighborhood?
Well, it's closer, right? So the shipping costs are less, and the thing is, if we end up being the same price landed, just even from a consumer preference, right? You might say, wow, I just like the thing that's not going to take as long to get here. So in that way, this chart I have up here, the red line is kind of where tanker rates, and I'm using one to the UK just because it's a little bit more transparent to also then look at Brent futures. And then I look at the spread between Brent and WTI at Houston, because, it costs a couple dollars to get from Cushing to Houston. And you really want to say, like, what is the real economics? And earlier this month, this yellow line, there was barely enough spread between those two markets to cover shipping costs. And this is not even assuming there aren't any other costs associated with it, right? I mean, I'm clearly just looking at tanker rates. So you can say that even if it looks like there's a 25 cents, it's probably not, probably less than that. And at some level, sort of the end of next year look like, not even a go. But last week with, the move in Brent, that spread kind of widened out a little bit relative to the US. And that's, I think, where you need to look for the driver to, move us out of a range. If Brent can't get out of its range, WTI can't either, right? Because we're now trying to get to those markets.
Okay.
And if you kind of look at the complex overall, the red line is Brent, and this kind of fluorescent blue line is Oman, right? Which is Middle Eastern crude. And for most of this year, the front, Oman and Middle Eastern grades have been pricing over even Brent. And, that's because of the OPEC cuts, right? So they're tightening it up kind of in their area, in their region. And Oman's a little bit heavier crude than Brent or WTI. And so it's, you can see the backwardation in that curve, right? And everybody, prior to this upcoming OPEC meeting, the curves look really backwardated until you get to March, when the cuts, are set to expire, and then it kind of trails off a little bit. And I think that's probably where some of the opportunity is, the
coming
front,
this March.
Yeah, well, first quarter versus fourth quarter, right, has been pretty significantly backwardated, at least in Brent. And
for listeners that don't know, that's the sign of a bull market, right? Where demand is in the front market and higher prices, and your deferred contracts are less.
Well, that's kind of a misnomer, right? Because in this case, if we use this, right, it means that, like, if if there's manufactured tightness through cuts, and you expect those cuts to expire,
Yeah.
It's not bullish that the front is over the back, right? It's just logic.
Okay.
So, and that's sort of been the struggle for this market to come to terms with, right? These spreads have been so strong in the front, and people want to think, well, wow, hey, geez, that really means, this is a bull market. We saw this also in 2014, right? When prices were like $150 or something.
Yeah.
And
the deferreds were cheaper.
And way cheaper. We had some real significant backwardation. As a matter of fact,
so that's a really interesting, because most of us are trained to believe that a carrying charge market is could be a bear market, and a backward dated market is a bull market. And so you're poking a hole in that teaching that it's not always true.
Well, and even the example of the carrying charge market, that a lot of times happens when the market they believe we need to build inventory, so they'll pay for it, right? And in that way, we've had bull runs in carrying markets, right? Because it's like we believed it could be tighter in the future. And
interesting.
This chart I have up is 1 year calendar spread. So it's Jan versus Jan. And I just use that one because Jan's the prompt contract right now.
Mm-hmm.
And, this big backwardation here, which was the 2014, 2015. So Jan 14, Jan 15, where, we were almost $7, $8 backwardated at expiration. If you remember, that was just prior to really all of the shale production hitting.
Right.
And so it made sense that, the front of the market. That
was 140 crude back then?
Correct.
Okay.
And then all of a sudden we collapsed, right? And sure enough here, right, we see as soon as that happened, then, the front dipped back. There've only been, a handful of times over the last 10 or so years that the market's really sort of at expiration, right, on a 12-month basis, been in backwardation. Right. And it typically falls back below because the front doesn't really like to get that far away from the back unless there is like a Saudi production, disruption. And, unless there's an actual event. Geopolitical or, pipeline breakdown or, a hurricane, something like that. Other than that, it doesn't really, it's hard to get too far, disconnected from the back without the back responding.
Okay.
And so, we have right now the 2021 sitting here, and, we've been in kind of backwardation for a while, dipped a little bit, beginning of the year, but, I don't know if they extend, here's the thing to watch for this OPEC meeting. So currently the cuts are supposed to expire at the end of March. Kind of thought that they may extend them maybe through the end of the year. That'd probably be the best to hope for, right? They've tended to go like 9 months at a time.
Okay.
You wonder if the front to back spreads will be as strong, right? Because you'd think the back should get a little bit more, valued relative to the front if the same conditions are going to occur, right? If the cuts are now through the whole year, then you might expect some of these spreads to flatten out a little bit. If they don't, it's a sign that, man, I mean, there must be some big economic slowdown, right?
Yeah. Okay. So that'll be your market tell if they make the cuts and you don't get this type of move that normally would happen.
Yeah, and I don't know that people are, they've been so accustomed to buy the spread as a proxy for buying flat price. You know, it's easier to buy, you know, Jan March at 35 cents than, you know, to buy the outright.
Yeah.
Um,
Less risk.
yeah, and in that way, I don't, you know, I'll just be interested to see if it, you know, at least that's what I'll be watching for, is for some of these spreads to come off. I mean, again, it depends on what they're, you know, they're planning to say. I think I took something off of their website yesterday. You know, they talk about their meeting on the 5th, and you know, they said they really have two critical decisions. One is the fate of the current agreement, which expires on the 31st of March, right? And that's what we've talked about.
Yeah.
So they have to decide whether or not to renew it. And then the second is, given the outlook for the oil market in the first and second quarters, where demand is forecast to dampen while production, you know, is forecast to rise, you know, they need to see if they want to make deeper cuts.
Yeah.
You know, I
Okay.
think that would be a, you know, red.
It's a kind of a weak statement that the market might be in trouble. You know, there's something I've been reading about. You know, a lot of people believe that there's going to be problems. The next bubble is in corporate debt, but I've been reading that there are some challenges for the frackers, that they're having some challenges with their debt in being able to roll it over, and it's being downgraded seriously. Is that an issue for U.S. production? I mean, could we have a credit crisis in the fracking industry? Do you see anything like that coming, Brynne?
I mean, certainly I've heard those same stories, and you know, sure, you know, I think there are some smaller players, right, that just might not be able to sustain here.
How about especially if prices are under, say, average under $50 a barrel for, say, 6 months?
Well, I think it's actually more in some of the natural gas producers.
Natural gas, okay.
Because especially those that are concentrated, you know, in the Appalachian region. But
do you trade the Widowmaker?
Well, I know the Widowmaker is the March, April in natural gas. It's RBOB
Okay.
heating oil in crude oil. But, you know, we don't even need to go into that, because that also is used as a proxy for flat price, and it always fails. But the thing about this, I do want to touch on this credit thing, because in reality, how things play out is that you end up with some bankruptcies, and when those happen, firms can come in and buy, you know, these companies for pennies on the dollar. Yeah. Or they restructure and come out of bankruptcy. Regardless, they end up with a cheaper cost to produce, right? Because if you wipe away your debt, you suddenly now have a cheaper barrel. And that we've seen, it's been the result over and over again of bankruptcies. It doesn't really, you know, result in a loss of production per se, because somebody will take them on. Either they'll operate, you know, under bankruptcy, you know, restructuring, right, or they'll be purchased, and all you're doing is wiping out the debt that was driving, you know, their marginal break-even price in the first place.
That is really a pearl. So bankruptcy does not make the oil disappear. It just makes it easier to sell.
Yeah, it might make it not, you know, you might, I mean, the oil is all still there, right? It's whether or not it's actively being produced. So you might
bankruptcy, poof, and it doesn't disappear.
No.
So Brynne, I mean, really, I have a hard time being able to keep up with all the different things that you look at in energies, and that's why I consider you a great resource for people that just aren't directional traders. The way you look at spreads, and you look at carrying, and you look at things like the costs of transporting oil and how to take advantage of it. So for people that are oil bugs or energy advocates, and that's what they trade, why don't you show people where they could find you and get a hold of your research and use you as a intelligence gathering source for the inner workings of the energy industry?
Yeah, so there's a few ways, and well, thanks for being so complimentary, Dale.
Yeah,
You
well,
know,
you are,
just like you guys
you know,
look for signals on a chart,
yeah,
I'm just looking for a signal in a different place,
right,
right?
right.
And that's it. So the easiest, place to find me is on Twitter at Brynne K. Kelly.
Yeah, don't forget the K like I did.
Yeah, I know. I
Okay,
know.
so
That's
the
why I
other
should
Brynne Kelly, I don't know what she does, I think.
I
Anyway,
think there is another one without the
there
K.
is one. Yeah, because the handle worked, but it wasn't you. Anyway, so
So funny.
this is the real Brynne Kelly.
The real
Go
Brynne
ahead.
Kelly.
Yeah.
Yeah, and I also partnered with Cornerstone Futures and working with them in the oil markets, publishing weekly research and providing insight to clients. And so you can find me, I post that research online, again, through Twitter, and Cornerstone contact information. And also I do a lot of training for individual, traders that just want to understand how to find and look and pull all of this together. And on that, you can reach out to me on my Fundamental Angle website. The
Oh, you
contact's
want
on
to show
Twitter.
that?
It's on Twitter,
Oh, okay.
thefundamentalangle.com.
Okay. Okay.
I don't know if I have it up or
Okay.
screen. Let's
Okay.
see. Let's see. I'm afraid it'll bring me up to, see, it's going to bring me into my admin page.
Oh, okay.
Anyway, it's fundamentalangle.com. It's on the Twitter handle. You can click on it and click contact me. And like I said, don't feel that just because you're an individual that maybe that it's not tailored for you. I've worked with all levels on being able to analyze a particular trade, or really it comes down to education. So
Cool.
you can find me easily. It's just the easiest way to find me.
So Brynne is mentoring people that want to learn what she knows. And Brynne, I always appreciate you coming here and giving us some of your time. And I hope that this winter holiday trading season, that and everything else in your life is a gusher, and the pips rain down on you like
Amen.
an oil field that has really hit a real important artery. So
amen. Let's hope for an exciting next 4 weeks.
Yeah. So thanks a lot. I want to wish you, happy holidays, Brynne, and have a great new year, and really appreciate all you do to try and help people understand complexities that you really would have to spend multiple years just getting a handle on it if you did it yourself. I always say, Brynne, tell me if you agree with me. You can't learn experience. It only happens with the passing of time and living through stuff, but you can learn from the experienced.
Absolutely. Absolutely.
Okay.
There's no book on how to get the experience, but there are bonus points in life for seeking out those who have it. So, but you said it better.
That's beautiful. All right. So Brynne, thanks very much. I'll get your Twitter handle right next time. And thanks for being with us and edifying the community today.
Absolutely. Happy holidays.
All right, Brynne. Everyone, that's Brynne Kelly, and you could follow her on Twitter at Brynne K. Kelly. That's a wrap for us today, everyone. See everyone for Turnaround Tuesday. Good hunting. Don't forget, we still have the cyber sale going on, 2 for 1 until I believe Tuesday. Adios, everyone. You're welcome, Ingmar. See ya. Oh, yeah. Don't forget to, don't just count your pips, count your blessings. And what the heck, be one. Adios.